Good morning, grade 9. Today's lesson is about correcting the net profit, or to be very, very correct, we should say correcting the draft net profit. Okay. Now, we've looked into how we make mistakes and how we correct the mistakes. We've opened suspense accounts, and then we have passed the correcting journal entries, closing the suspense account. Now, when you looked at the errors previously, you also saw that some of those errors would definitely affect your profit. All right. Now, when you prepare your trial balance and when you have a suspense account, you will not be wasting time just trying to search for the mistakes. It will take a long time to find out the mistakes. So what you actually do is you go ahead and you prepare your income statement and the statement of financial position. But when you do that, these statements which you prepare are actually called draft statements because they're not the correct ones. There are mistakes in the books of accounts, right? So the profit which you get when you prepare your income statement, when your trial balance has a suspense account, is called a draft net profit. Yep. So in today's lesson, basically what you're going to do is you're going to correct these draft net profits in order to come to the correct net profit. Okay. And you're also going to correct your draft statement of financial position. So on page number 121, you have illustration 9, and we will discuss that. When you look at a mistake, the very first thing which you need to do is you have to identify whether this mistake has increased or decreased the draft net profit. Let's look at an example. Here it says, the first error, insurance of $500 has been omitted from the income statement. So $500 has been omitted, in the sense you did not record this expense, the expense of insurance. Okay. So when this expense was not recorded in the income statement, what do you think would have happened to the draft net profit? I mean, this draft net profit, has it been increased or decreased? Obviously, the draft net profit is showing an increase because one expense is not recorded. So this draft net profit has to be brought down if you want to correct the mistake and you want to find out the correct net profit. This draft net profit has to be decreased by 500. Okay, so if you look at the statement of correction of profit, which is down, you will see insurance is put in the decrease in draft. You have two columns here. In the first column, you put all the items which are going to increase the draft net profit, and in the second column, you put all the items which are going to decrease your draft net profit. Okay, so this insurance of 500 will now decrease the draft net profit because it is an income and it should be deducted from the gross profit, right? So now the draft net profit will be decreased by 500. Then sales had been overstated by 360. Now this is an income which has been overstated. You by mistake you showed more income, so obviously the draft net profit is actually more, so it has to now be brought down. So sales, as you can see here, again in the decreased draft net profit by 360. Then trade payables had been mistotaled at 14,360 instead of 15,360. The question you need to ask here is, trade payables, is this going to affect your net profit? What is it? Is it an income? Is it an expense, asset, or liability? It's a current liability. Okay, so when it is a current liability, obviously it's not going to affect your net profit. So this is not going to be reflected in your statement of correction of the net profit, no effect for trade payables. Then rent 440 had been prepaid at the year end. But this had been overlooked when preparing the income statement. This actually belongs to chapter 4, wherein you'll be studying about accruals and prepayment. For the moment, what I want you to understand is, when you're looking at an expense, and if this expense has been prepaid, or this expense has not been paid, if it is not paid, you have an accrual. If it is prepaid, you're having a prepaid expense. Okay. This should not come in the current accounting period. That is, if I am accounting for the year 2019 and I'm having payments which I should pay for 2019. Let's say rent. I'm paying rent 3,000 dirhams every month. So 3,000 times 12. That is 36,000. So 36,000 should be shown as rent. But let's assume I paid 3,000 extra. That is, on 31st of December, I paid 3,000 for January 2020. Okay. What am I interested in? I'm interested in the books for the accounting year 2019, Jan 1, 2019 to December 31, 2019. Now on December 31, 2019, I made payment for January 1, 2020. What happens here is I should not take that into the books of accounts when I'm preparing for 2019. It's that simple. We will look into this in chapter 4. Okay. 4 point something. Anyways, so here what has happened is rent 440, which has been prepaid, this increased the expenses. Thereby, it decreased your draft net profit. Okay, so this expense, which was wrongly written, has now got to be corrected. How do we correct the net profit, draft net profit? We add 440 to the draft net profit because this is an expense which was wrongly written. When an expense has been increased, to correct it, that amount has to be increased here for the draft net profit. Then purchases returns of 600 had been omitted. Purchases returns is usually deducted from purchases. So this time it was not done. So what happened to the expense? The expense had been shown as a increase, right? It increased the expense of purchases, which was wrong, and therefore what happened to the draft net profit? Draft net profit was decreased. So purchases returns has to be put in the increase for draft net profit column. Okay. To correct your draft net profit. Then discount allowed of 450 was added to the gross profit in the income statement rather than deducted. Discount allowed is usually shown in the expenses, and it's discount received which is added to the gross profit. Okay, but here discount allowed has been added. Therefore, what happened to the draft net profit? Draft net profit got increased. So in order to correct it, you have to decrease that amount. Yeah. In the end, when you add all the items on the decreased by column, decreased the net profit column, you get 1,760. When you add all the items in the increased column, you get 1,040. 1,760 minus 1,040, you get a negative 720. So now the draft net profit is 68,300 as written here. 720 minus 68,300, you get 67,580, which is your corrected profit. Actual profit should have been 67,580. Moving on. Same logic for correction of the statement of financial position. Now, here in illustration 10, you have the error balance of equipment account was understated by 700, which means equipment, let's say you had equipment worth 1700. Instead of writing 1700, it was written 1000. It was understated. So to correct it, you have to add 1000 to the equipments. Then, no entry had been made to record a payment of 500 to credit supplier. Now, this is a little tricky because you need to understand that the mistake has been made on two sides here, though it is not specifically telling you. The payment of 500 to a credit suppliers. So this one completely has been omitted from the books of accounts. 500 should have been deducted from the bank account, and 500 should have been deducted from the credit suppliers account also. So in order to correct the mistake, that's exactly what you will do. You will have to reduce your bank balance and the trade payables by $500. Then, drawings of 17,600 had been entered in the statement of financial position as 16,700. To understand what is happening here, let's come to the equation here, that is opening capital plus profit minus drawings. This is what we usually do in order to find our closing capital, correct? As you can see, drawings is deducted, right? So instead of deducting 17,600, you deducted 16,700. Now you have overstated the closing capital by 900 because drawings actually is giving a negative effect, but you did not do that correctly. You understated drawings by 900 and you overstated the closing capital by 900. So when that happened, now you have to deduct 900 from your closing capital. That's all. For your assignment, it's problem number 11. It's pretty simple except for error 3. It's actually simple and I'm not going to explain it. I want to see first how you tackle it, and we will discuss this next Thursday. Okay, but I'm telling you it's very, very simple. Just use your common sense and you will get it. Yeah. Okay, then boys, have a lovely weekend and I'll see you next Thursday. Yeah, bye-bye.